From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming May 15th Forex session in the Euro Kiwi pair. This is one that I don't analyze quite often, but it is one, as you can see. The first thing that's caught my attention, of course, is the fact that we have a nice downtrend. That's always a good thing to have a nice trend, obviously, so that has caught my attention. And also, you can see that we have bounced off of the 158 level a couple of times, really. I mean, if you give it 30 pips leeway one way or the other, and that's really not that much to ask for in a reasonably a secondary market. If exotic's probably a strong word, but definitely a minor. You can see that we bounced significantly, and we've come right back down to the 158 level where we saw buying again. Interestingly enough, if you draw a fib from the swing high up there, you can see that the 38.2% Fibonacci retracement level is right at 162.5, so it would make sense that sellers would come back in. This to me signals that we are probably going to try to seriously break down. The euro against the US dollar is sitting right on top of significant support. And with that, I think that if we break down in that market, the dollar and the Kiwi dollar will move in tandem, at least against the euro, because this is about euro weakness. This isn't necessarily about the Kiwi dollar, which, by the way, actually is doing okay. It's not doing bad against the US dollar. It's actually one of the stronger currencies at the moment. It's going backwards from the pound and from the euro and even from the Australian dollar. So while the Kiwi is doing fairly well, and like I said, fairly is the word you'd use, it's not necessarily burning up the charts. The fact is, the euro has been sold off rather drastically. So I feel this is about the euro. Now, if we drop through here, this is a market that's a little thinner than the euro dollar. And as a result, we could drop to 1.55 rather quickly. Until we get above the 162.5 level, basically this high here, maybe in 163, I have no interest in buying whatsoever. And I think that any rally from here should be treated with suspicion, as we should see resistance come back into the market. A daily close, a fresh new low, and we are closing lower than we have here recently, but we have not cleared the 158 level, which is another sign too that we're breaking down. A fresh new low, a close below 158. Really, at that point in time, I have to be short of this market.